Welcome back to my channel. In this video, I wanted to cover UnitedHealthcare. They announced their earnings today, and the stock is having a very rough day. The stock is down 23% in early hours of trading. What happened? Is something broken? Is UnitedHealthcare a buy or a sell? That's what I want to cover in the video. UnitedHealthcare has historically been a really good stock to own. I owned it for many years. I sold it going into 2022, and I was very happy with the rate of return for UnitedHealthcare. But since then, it hasn't done all that great. From spring of 2022 to now, investors haven't made any money. They actually lost a little bit of money. Over the past year, investors would be down 5.61. And today, of course, is a big drop of almost 23%. The stock doesn't pay a very high dividend. The rate is 1.86. It's been a really good stock for a long time. So I'm optimistic that there's a quality company behind all this volatility. Let's take a look. United Healthcare has a market cap of $414 billion. That is the biggest market cap company for health insurance payers. It's one of the biggest health insurance market caps, if not the biggest. Revenue, $400 billion. So you're paying 1-to-1 on sales. The current PE is 19. Forward PE is 14, which looks really good. Analysts like the company, and they believe it's discounted. When I look at the most recent earnings, the positives is that they grew really well, almost 10%. If you look at the first quarter of 2025, where the problems begin is in the reimbursement rate of Medicare. That's one of the biggest categories for UnitedHealthcare and most of these healthcare payers. And the reimbursement rate is lower, meaning when UnitedHealthcare sells a policy, a Medicare Plus policy, they're not making as much money because the reimbursement rate really changed. And that really does change the business fundamentally. So that's the big sell-off is, well, if they're not going to be as profitable going forward, then investors don't like the business as much as they did before. I can understand that. Now, sometimes certain bits of news are overplayed. If I look at the cash flow did go up in the most recent quarter. That looks really good. I'm not going to use the trailing 12 months. I'm going to use the 2024 number, which is lower, and I think more conservative. And that's what I want to do at this time, since there is some bad news on the reimbursement rate. But the cash flows for United Healthcare, this is why they're worth over $400 billion, is look at this beautiful cash flow. They've grown it over time, and they kind of hit a plateau period from 22, 23, 24, and then trailing 12 months. Not a lot of growth on that cash flow. It is a great cash flow number. It just hasn't grown. And I don't see where there's going to be growth in that cash flow number going forward. That is the main reluctance of me owning the stock. But if it's down 23% today, maybe it's a good opportunity to enter the stock now. Overall, health insurance companies are profitable. They have a very consistent customer base, which is the people that are insured by United Healthcare. So 20 analysts cover United Health, and they all really like the company. They all believe that the stock is worth more than its current stock price, especially since its big drop today. And they believe on average it's discounted by 40%. That's a really nice discount. When I look at the revenue growth expected from United Health, it looks good. In 2025, they're going to have a good growth rate, higher than the previous year. And then after that, they're going to be in the high single digit and then 10% in 2028. The earnings per share really jumped up this year. It almost doubled. So that is a little bit of a paradox that the reimbursement rates have changed. They become harder for United Healthcare, but their profitability is really expanding. And it's expected that the earnings per share will continue to expand at a faster rate than the revenue going forward. That's really good. That's going to cause their forward PE to continue to drop. So those metrics look really impressive to me and attractive. So I used the most recent fundamentals and valued United Healthcare, and that's what I'm showing here. Let me go through the intrinsic value that I produced along with its earnings per share valuation. The intrinsic value for me is the net present value of free cash flows that I expect from United Healthcare in the future. I'm going to start with 2024's numbers. I'm going to grow them by 5%. That might be a little conservative, but that's fine. If some bad news hits them, I won't be surprised too much. When I grow those numbers by 5%, the number is so big that it really drives a lot of value. And when I bring it to a net present value using a discount rate of 8%, I get to $522 billion of value. That's why United Healthcare is such a big cap, is that cash flow. I add cash and take away debt and arrive at an equity value of 475 billion. The market cap has dropped to 411 billion. So there's a 13% discount if you compare the intrinsic value of the cash flows for United Health versus its current stock price. Earnings per share also looks good. It's got an earnings per share expected of 30 in the current year. I'm going to use a PE of 18. It's a growing business. They're growing at 10% top line, which is good. And I'm going to grow that by 8%. They're probably going to do a little better than that. But again, I'd rather be a little conservative. And using those figures, I get a 23% discount. So when I blend the two, taking more weight in the free cash flow intrinsic value method, I get a 17% discount on United Health. Now, United Health is a quality company, but the discount doesn't look all that great. I think I could probably find a better discount in other parts of healthcare with health insurance companies that have a better growth rate and maybe are adapting to the new Medicare reimbursement rates. That said, United Health for me is a sell. There's just too many problems and not enough of a discount. It's not a stock that I want to start to buy. It's not a stock that I want to hold. I think there's better options out there in the health paying insurance industry. United Health Group is a desirable business. And why do I say that? Mainly because their moat is in the form of their customers don't switch all that often. United Healthcare has big employers as their customer, and then those employers will insure their employees. And switching is really difficult. And they don't want to take their employees through that change, as well as individuals that get healthcare insurance from United Health. They just don't want to switch. It's really painful if you have to switch doctors and really get to know reimbursement policies and rates with the new health insurance company. So their whole network model and their employee base is the moat itself. They're going to continue to grow. They're going to continue to add customers. They drive incredibly high profitability. So it is a really desirable business. In the case of United Health, they just don't offer a high enough discount. If you offered me a better discount, I would definitely be very interested in owning the stock. A high number of big investors own the United stock, and a total of 17 super investors own the United Healthcare stock, which is really a high number. Although it's owned by many, a higher number of investors are selling the stock versus buying more. And that is a sign that maybe they are picking a better option within the healthcare space. They're not as optimistic about the business as they were before. But the good news is it's owned by many. As far as insiders, you've had one sell transaction, one buy transaction for about the same value. And it's good to see some buy transaction versus just sell transactions from insiders. Overall, this is a highly regarded company. Big investors really like the stock and have stayed in the stock for a long time. My personal experience with the stock is I did really well with the stock over multiple years and really have liked the company. I thought they were really, really professionally run and would gladly buy the stock again if there was a better discount available. For the time being, I'm going to be an investor in Elevance and CBS, which have been doing well. And both of those stocks are down today, but not nearly at the rate that United Healthcare has dropped. So that's my video on United Healthcare. It is a sell for me, but if the stock drops more and there's a better price out there, it would definitely be a buy. I appreciate you watching and good luck with your investments.